Good morning. Happy New Year to everyone. This is Mark with your analysis for the 2nd of January 2013. I didn't trade at the market open. I was just watching and waiting to see how markets would react to the US news that they have passed the budget bill. The fundamental thing to note here is that nothing has been done to bring down the US debt. So in actual fact, this saga is going to continue to drag on for the next few months. If you imagine the scenario in Greece, where there have been huge cuts, similarly in Spain and Portugal and other European countries, where the explanation from the US and top European politicians has been that we have to make dramatic cuts, high unemployment, huge cuts from government spending, and yet none of this has happened in the US yet. They continue to print huge amounts of money every month, and one would think that eventually this situation cannot go on. The markets have not seen this as being particularly positive for the US dollar this morning. Everything else is going up against the dollar. This is the Euro USD on a monthly chart, and we can see now clearly we were watching in recent months for this trend line to break, and this trend line went back to 2011, and December's candle has clearly broken and closed above 5-8 cross, stochastics up. Everything suggests the euro is going to continue on its merry way. That in itself is nonsense, because the euro zone is in a similar mess to the US. But hey, who are we to think? It's not that the euro is getting better against the dollar, it's just that this morning it's perceived as being not quite as bad as the dollar. So as traders, what do? Well, what you can see with the Euro USD, this is on a weekly chart, for the last 3 weeks, price has bounced continuously, and it's done it again this week, off 31.70, and therefore at the moment personally I would prefer big pullbacks. This nonsense usually doesn't carry on, but we're waiting till after Martin Luther King for clear direction, because that's usually the day when the markets settle down. Recently we broke the double top, and then, as you know, resistance becomes support, and it is a major huge support line in the sand, and therefore for me, as I say, if we get to pull back down here tomorrow, I will be interested to long. Same pair on a 4-hour chart, and it's much clearer here, 31.70. Here was the final break of that double top. It took 2 or 3 days to do. Finally broke out. What does it do? Well, when it's done the breakout, it then becomes support, bounce back off, support. So what you could do, you could be doing as in the summer months. You could be looking for shorts anywhere around 3,300 and longs around 31.70, and simply be paying these bounces. Here we have the monthly gold chart, and I showed you in recent weeks and months how this line has held since 2008, and once again last month it came down, spiked it, but it's not broken, and so we are then thinking in terms of gold going higher. Similarly, I showed you the other week on a weekly chart, we had this never in a million years Bollinger Band coming up, we had the trend line at 61.8. If you were looking to buy the physical metal, that would be the area. And similarly with silver, price was coming down to 2,900. Again we have this Bollinger Band in place, and again we have these fibs. Those were areas that it would be expected to bounce. I've shown you in recent months on the Aussie dollar how 103.70, this 61.8 fib, has been mega important, and price, although it broke through this trend line last week, it has bounced once again off this fib, and therefore with the Aussie dollar I am simply watching for fib bounces. And the main areas with this is 103.70 and up the top 105.70. If you're trading intraday, then watch 10500 on a 4-hour chart. It has been important for support and resistance recently, so have a look on there. And if you're looking for clues, you are looking for candlesticks like these. Here we'd had a breakthrough, pullback to be expected, support became resistance, but you're looking for indecision candles at the top of a move. So if we were to have this spinning top close candle here, then you would start thinking in terms of a bounce back down. Similarly, the dollar Swissy. Now the dollar Swissy for the last few weeks has been bouncing off 90.70, 90.80 area. What's interesting to note here is this is the weekly Bollinger Band. We had a move down last week, and therefore you would expect the Bollinger to stay open, and it has closed, and that appears to be a strong area of previous support and resistance. So again, look at these two areas for potential trades. The CAD did its pullback last week, didn't quite get to 100. That was the area I was saying if it came back up here we'd be looking for further shorts. Now, if you've missed this, already today we've done the daily range. We look as though we're getting 5-8 cross and stochastics rolling over on this pair. If you're trading intraday, look around 9,900 for a potential pullback and then a short. Euro pound is just simply too messy at the moment. There's a lot going on this chart. This is the weekly 55. Just above we have the monthly where price rejected last month. It's too messy for me. I need a pullback and therefore I would leave that alone. The pound made a big move this morning, and notice here how this weekly 200 EMA now appears to be important, and therefore if you're looking for bounce trades, we're currently bouncing off the monthly 55 and this weekly 200, so those would be the areas to have a look. But now it's already done the move and a major spike up, almost broken the double top. Remember, this candle is not valid until it closes above that line, and therefore 163.00 at the moment is the major line in the sand. Dollar yen, well, the dollar yen last month did close clearly outside the Bollinger Band and it broke 8300, which is a significant move. Now, when price goes outside the Bollinger Band, as you know, 9 times out of 10 it will either wait or it will pull back to the Bollinger. So if you're trading intraday, have a look at 8600 for a potential long. Once again, on a personal note, I would far rather have a big pullback all the way to 83, but certainly 86. Now you need to be careful with all yens this week because the bank holidays in Japan go on until Thursday, I believe, and then of course Friday is NFP day. So for me, I will have a look later today for potential trades of 4-hour charts for all pairs and Thursday, and I will be out of the market Friday. A lot of the big boys don't come back till next week, and even more don't come back till after Martin Luther King Day. So we're likely to see thin markets for the next few days, and basically watch the news, see what action, if any, the news can cause for us. Have a good day.